Hi, this is Brian Davis. It's about 11:57 right now. We'll get started in about 3 or 4 minutes here. Just wanted to thank you guys who have joined early here. We'll get started about 12 or 12:01. So again, I'm going to put myself back on mute, and we'll get started in about 3 or 4 minutes. Thanks. All right, everybody. Let's for passive income. And today we have our special guest, Darrell Kucan of Kucan Clark Partners. And just to do a little administrative piece here first, I'm going to do my webinar about the basics of self IRAs and how 15 or 20 minutes, and then I'll turn it over to Darrell. And Darrell, I've gotten to know over the last, I'm going to say, 6 or 7 years from the San Diego Investment Club, in which him and his partner Imran Clark run. But Darrell and Imran are also huge guys here in the San Diego market that I've gotten to know through doing fix and flips and they do some out-of-state investing as well. So I'll turn it over to Darrell in about 15 minutes. Those of you on right now, you're all on mute. But if you have a question, there should be a place where you can raise your hand or type in a question, and then we'll get to that either in the middle of the transition over to Darrell or at the end. So please feel free to raise your hand, input your questions there, and we'll get going. So again, it's Brian Davis with Independent IRA. Thank you very much while we get started here. A little disclaimer as we get going. I am not an investment advisor. I cannot provide any investment advice, so please contact your investment advisors before getting into any type of investments. So let's talk a little bit about self-directed IRAs. So I work with a custodian out of Las Vegas called American Estate and Trust, and that's what gives us the ability to hold investments in with IRA funds for clients. Now, the big difference that sets us apart is that we're here specifically to hold non-traditional investments. So investments in things like real estate, notes, private companies, and coming soon cryptocurrencies, to name a few investments. That's what we're here for, is to hold those things that are not publicly tradable. Otherwise, you can go with the traditional investment banks and custodians, the Fidelities and Schwabs of the world, if you want to invest in the securities market of stocks, bonds, mutual funds, etc. So that's our role here, and I'm an independent advisor for them, so I help my clients open their accounts, fund their accounts, and help them when they have investments with their self-directed retirement accounts. So for most of you out there, you probably know a little bit about self-directed IRAs. Those who don't, you're not alone. A lot of attorneys and accountants don't know too much about our space. They probably know enough to be dangerous. So you need somebody like myself that works with one of these self-directed IRA custodians that can help walk you through the process of investing in one of these types of investments like real estate. So IRAs, there's about $17 trillion in total retirement accounts out there, and about a little over $7 trillion of that is in IRAs. Less than 5% of that are in IRAs that allow for investments in things like real estate. So that's why it's a growing industry, because when I started in this business in 2009, that number was about 2 per ground. And to give you a little background about myself, I've been in the self-directed IRA space for the last 9 years. I did real estate loans prior to that from 2002 to 2007, and that was coming straight out of college from UC Santa Barbara, where I went to school. And I had preceded that by coming from Northern California, where my parents are rice farmers. So I come from a different farming community, but it was very real estate related, obviously, being in farming. But I went to college in Southern California in Santa Barbara, and then I've been in San Diego since 2002. But again, we're an IRA state metals. Now, your IRA can invest in a multitude of things, as you'll see from this slide here: rental properties, raw land, lease options, promissory notes, private placements, etc. This list could go on and on and on. So the IRS rules from the ERISA Act in the early 70s kind of outlined the retirement accounts that we know today, the 401k plans and the IRAs. And they basically said you can invest in just about anything you want, as long as there was a custodian to hold that investment. And that's where the custodian I work with, American Estate and Trust, comes into play. We can hold these types of investments in your IRA. So besides that, there's some other rules and regulations the IRS put out there. So besides, you're not able to invest your retirement accounts in a work of art, rug collection, anything they would deem as a collectible. and as well as life insurance contracts. IRAs can't invest in life insurance contracts. These are about the only things the IRS has said you cannot invest in. And they've even made some exceptions, as you can see here, on certain precious metals coins for those that do investments into precious metals. And so it's not just that simple. You can invest in not everything, but these things. There's some other rules of what's called a prohibited transactions in your IRA. So prohibited transaction, and I'll try not to use too much more jargon, is when your IRA gets involved in who's considered a disqualified person. So a disqualified person would be yourself, a spouse. Think of this in a straight line up, and grandparents, kids and their spouses, grandkids and their spouses, kind of straight line up and down. So that those people cannot be involved, as well as a company in which they're, kind of an owner of. So there's no self-dealing in this. And we'll go through some examples here. So if you're caught getting involved in one of these prohibited transactions by the IRS can disqualify your whole IRA as of January 1st of when that prohibited transaction occurred. So you kind of really want to think of this. There's no self-dealing in a retirement account. You can't be involved in your own personal deals or your own business with it. So I'll give some examples here. So everybody probably remembers the game Deal or No Deal from TV from probably a decade ago now. But we'll play the game. We'll play along here. Could your IRA lend yourself $10,000? Deal or no deal? That one is no deal because self-dealing rules. You can't lend yourself money out of your IRA account to yourself. That's a prohibit. You're a disqualified person. That's what's prohibited. The basic answer to that is deal. So you could lend your brother $10,000 as long as he's not circling back around to you or any of those other disqualified persons, but your brother is not on that list of disqualified persons. Now, we'll get some of the tricky ones going here. What about your stepson? Could you lend your stepson $10,000? Deal or no deal? Apparently, this goes in the deal category. If it was your son, this would definitely be a no deal. But stepson, the IRS has said that's okay. So it does get confusing here. We'll do one more before we move on to some of the more fun stuff about the things you can do with your retirement account. But could you lend your daughter-in-law $10,000? Deal or no deal? That one is no kids in their houses. So the IRS has kind of outlined what family members are, part of the close-knit family and who's considered outside of that. So you really want to make sure that none of these people are involved, not just a direct loan, but involved in the transaction. So you can't buy a piece of real estate and have your spouse be the real estate agent on it, making a commission because she's receiving a personal benefit and she's a disqualified person. So if anybody has any questions on that, feel free to email me or contact me offline, and I'll be able to, help point you in the right direction. So let's get into some of the more fun stuff. So a lot of people ask me, this is one of my more frequently asked questions, well, how do I put money in a self-directed IRA? Well, self-directed is really just a marketing term that our industry uses to let people know that, hey, you're the one in directing the investments, and we hold these investments that most companies won't hold. So you fund these self-directed IRAs just like you would your IRAs at your brokerage house, because we have traditional IRAs, Roth IRAs, and SEP IRAs. And what they'll do is they'll make a check payable to your new IRA, and there's no tax consequences for doing so. So what you don't want to do is have them just send you a check, because then it's to your name. They need to make it out to the IRA's name, because then they'll want to take 20% out. But if you have them do a direct rollover to the IRA accounts there is no tax consequence for doing so as well. And then the third and final way to put money into your IRAs is making an annual contribution. Most people have, a traditional or Roth IRA. You're allowed to contribute up to $5,500 a year, which isn't too much. If you're over the age of 50, there's a catch-up contribution. You can throw in an extra $1,000. And then a lot of people out there might have worked for a company that offered what's called a simple IRA. So this is an employer plan, kind of similar to a 401k plan, but the contribution limits are a lot lower. You can only put in $12,500 a year in a simple plan, and that's when you're with the company. And then there's a very small company match option there and a very small catch-up contribution as well. And the other accounts I want to highlight here is the SEP IRA. The SEP IRA is a self-employed pension. This is for self-employed folks, and it works just like a traditional IRA, as it's a pre-tax IRA versus a Roth IRA, which is an after-tax IRA. The SEP IRA, you can make a contribution to your SEP plan depending on how you're set up as a company, but essentially it's up to 20% of your adjusted gross income with the cap at $55,000, or if you W-2 yourself, up to 25% of your gross W-2. Now, if you're self-employed and you have employees and you have this SEP plan, you would be potentially have to offer it to your employees the same percentage that you're offering it to yourself. And then the one plan I do want to highlight here is the individual K. You'll hear it called a solo K or a one participant 401k plan. That's for the self-employed individual with no full-time W-2 employees. So it works very similarly to the SEP IRA, except there's two ways to make contributions to it, and I'll go into that in a minute. So we try to make the IRA process as simple as possible. With American Estate and Trust, you can get your account open in a matter of minutes online. I have a link for you to open up an IRA account, and then we work on funding the account with those three methods: a transfer, rollover, or contribution. Keep in mind that can take anywhere from a few days to a few weeks, depending on whom your retirement account is with, how liquid those funds are, and how they send the funds, whether they send it via wire or check. But then we're ready for you to fund an investment. You can do so with our direction of investment form, and then that asset is in your IRA. And so we'll go through, some of these real estate type of examples with Darrell in a few minutes here. But I want to get to this slide real quick before I move forward. Well, okay, but I don't have quite enough in my IRA. What are my options? Well, these are your options here. You can partner with yourself as long as you set it up from the beginning, though I would recommend doing it with third parties is a little bit easier. But the key to partnering, whether it's with yourself or other people, is splitting income and expenses in the percentage of ownership. The big one here to talk about is you can get a loan from a non-recourse lender. So there are lenders out there who will lend to your retirement account. But keep in mind, if you do this with an IRA, and your IRA does make the payment, that there's a potential for a tax to your IRA, something called unrelated business income tax, or UBIT. And that's a whole other webinar for another day. And your retirement account can get a loan if you don't want to partner with other people. And, I can let you North American cities in the country. One thing to jump into here is the checkbook IRA. So a lot of people some people get into a lot of investments, and it's easier sometimes to have a checkbook IRA set up. And depending on where you are and what state you're investing in, you're going to be looking at a couple options. You can do an IRA LLC, or you can do a business trust. So in the LLC method, your IRA is the sole member of the LLC, and you as the IRA owner are the unpaid manager. With the business trust, it's very similar. The IRA is the beneficiary owner, and you as the IRA owner are the trustee of that. There's some big benefits if you're in California. with the business trust is not having to deal with the franchise tax board fees of $800 a year or the gross receipts tax. But I don't want to dive into that too much today. I really want to get over to Darrell and his presentation. But one more thing before I turn it over to him, I want to talk a little bit about that solo 401k plan, or the one participant 401k. So 401k plans, as it says here, are retirement saving trusts. So you as the business owner can have your own 401k plan, even if it's just you in business. And it doesn't matter if you're just a sole proprietor with 1099 income, or you're an LLC with Schedule C income, or you're a corporate get into the next screen here. So you can contribute, actually I need to change this, up to $61,000 a year now in 2018. It was $60,000 in 2017. So you can make contributions as both the employee and the employer, and I'll get into that in a second. So one of the features is the employee deferrals, where you can defer out of your W-2 pay up to $18,500 a year. And that can go in pre-tax, just like a traditional IRA, or after tax, like a Roth IRA. So that allows people to put more money away on a Roth basis. Another benefit is you can loan yourself up to $50,000, depending on how much your plan assets are. So you can give yourself a personal loan if you need to do some deals personally that are outside your retirement account. So that's a big benefit here to people as well. And going back to that last slide about getting those non-recourse loans for your retirement account, the 401k is exempt from that part of unrelated business income tax. So if anybody has, fills this role and they have questions about it, please let me know. Again, you can put money in as the employee and then make what's called a profit sharing contribution as the employer of up to 25% of what your W-2 pay was, or up to 20% of your adjusted gross income. So very similar to the SEP IRA contribution on that side, but you can also make that employee deferral. So it's a lot easier to make that larger contribution. So you can create this 401k plan and directly hold the investments yourself. So I show people how they can have a trust account at their local bank or even at a brokerage house and do the investments directly, or some people, for the sake of anonymity, like to create a business trust before they do that investment as well. So we can help you create that 401 plan and get going into that. Again, my name is Brian Davis with Independent IRA. You can find me at independentira.com. Call me at 619-432-4555, or email me again, Brian at independentira.com. So from there, again, people, if you have questions, please raise your hand in the dashboard here, and I am going to turn this over to Darrell. Darrell, are you there?
I am here.
All right. So I know that was a lot there.
Man, that's some great information, and I am so excited to share with everybody here the opportunities that are available. Well, let's get started real quick. Let's see. Let's make sure this works. There we go. So my name is Darrell Kucan, and that's my business partner, Dr. Kucan Clark, on the right. We've been full-time real estate investors for over 10 years, completing nearly 500 successful transactions. And those include fix and flips and buy and holds. We do a lot of partnerships. We do some note investing all the way to new construction projects and a lot of other types of transactions in between. Now, Imran is a licensed California real estate broker. He has his PhD. I love what Brian taught today, because there's so much opportunity out there to work with us or somebody else in some other fashion or another. like partnering with us on our new construction projects or gap funding on other homes that we're working on. But today we're specifically going to talk about using your IRA to invest in real estate for passive income. So what is a turnkey real estate? Let's talk a little bit about that. Turnkey real estate is a done-for-you rental property, right? Turnkey providers specialize in finding discounted properties in desirable rental neighborhoods. We rehab the homes, we find and place quality tenants, and have professional local property management in place to manage the day-to-day operations of the investment property. Now, if you're investing your IRA, what happens is the asset then is held within the IRA. Therefore, when people make rent checks or there's maybe some sort of a fee that has to go with that, it's going back into your IRA. You're not going to collect that as mailbox money. It's going to go right back into your IRA. And there's some amazing benefits about this. People that we work with, generally, they make anywhere from a 6 to 22% return, depending on what type of investment that they're investing in with us. So some of the benefits of turnkey rental real estate is obviously one of them is cash flow. Rental properties provide a unique opportunity to generate cash flow that only improves over time. With the property managed cash flowing rental properties, your tenants are generally paying down the debt for you each and every month to help you build that equity. Now, a lot of our people that buy rental properties from us, these turnkey rental properties, there's already built-in equity. They're getting roughly 20 to 30% equity built in on the day that they purchase. There's also a lot of tax benefits. Now, I'm not a legal professional, I'm not a tax advisor, so definitely ask your tax advisor about this, but one of the tax benefits is depreciating this asset over time. And in real estate, it's 27 and a half years. There's also a lot of other tax benefits that go that as well. So about turnkey providers. Turnkey providers, like ourselves, eliminate many of the obstacles that stop potential investors from entering a new market. And this might include identifying high return markets, identifying ideal neighborhoods to invest in. Now, you could be on one side of the freeway and that's somewhere you don't want to invest. So after doing our market research, after doing a lot of due diligence, we found several markets to create that great cash flow. Sourcing and negotiating discounted properties. That's why we're able to hand over these properties at a discounted price. We also source reliable contractors and rehabbing the home prior to the tenants moving in. We source local professional property management as well. That's one of the key factors in owning rental properties, is having a good property manager in place. Screening and placing the first tenants. You want to make sure that you've got good tenants in place, that they're going to not just pay on time, but keep the house as if they were to own it. So we do all the heavy lifting of building your rental portfolio. And again, that's why they're called turnkey rentals. But why buy turnkey rentals? Well, ease of the transaction. It's low impact investing that creates a stable passive income that can be done part-time or hardly any time. You get to increase your net worth. Home prices rise over time, mortgages get paid down, the rents go back into your IRA, and in some cases, like Brian said, could be tax-free. Low cost of entry. So become an investor with a little experience and as little as $15,000. Right? You can use your investment to maybe put a down payment on a house, or some sort of a lease option type of a thing. There's many types of transactions you can do with a low entry cost. Cash flow. Rental properties provide a unique opportunity to generate cash flow that only, again, improves over time. And we talked a little bit about appreciation. The property values are on the rise from coast to coast. And appreciation over time can help build wealth. Again, we talked a little bit about equity. Now, property managed, cash flowing rental properties, your tenants are generally paying you back over time. So if you invest $40,000 to $50,000 in a rental property, that'll get paid back pretty quickly. And then over time, your IRA grows. And again, tax benefits. There's many well-known tax benefits to investing in rental properties. And again, just ask your tax advisor. So who buys turnkey rentals? I mean, a lot of busy professionals who like the idea of owning investment real estate, but don't have the time and don't want the headache. Investors that live in expensive areas that would like to invest in new markets to realize the higher returns. I know in Southern California where I live, it's really hard to buy a positive cash flowing rental property, because a $300,000 or $400,000 house that rents for $1,500 a month is going to be a negative cash flowing asset. A lot of retirees buy turnkey rentals because they want that passive income coming in. Also, new investors, they feel overwhelmed with the process of building a rental real estate portfolio. That's why we help do it for you. So basically, everyone that wants their money to work for them, that's who buys turnkey rentals. So let's talk a little bit about, actually, I'm going to show you a couple of examples of turnkey rentals. And these are properties that have been purchased by others. And again, if you have any questions, I'll leave my information at the end. We can have a strategy session and chat, and we can talk a little bit about, your threshold and how you want to get involved. But we're specifically talking about properties in St. Louis, Missouri right now. Now, again, we've done market research throughout the country, and we found a handful of markets throughout the country that we found best to be able to buy rentals that give great cash flow, that have great tenants, and that provide awesome value. So the population in St. Louis, Missouri is about 319,000 people. The median home price out there is $127,800. But the cool part is 43.7% of the homes out there are already rented. Now, this is the second most affordable city among the nation's top 20 metro areas, and the average 3-bedroom house rents for about $1,000 a month. The cost of living is about 16.3% lower than the US average, and that's really good for the rental market. Fortune 500 companies are out there, including Express Scripts Holdings, Emerson Electric, Peabody Energy, a bunch of companies out there, O'Reilly Automotive. So here's kind of a screenshot of what our amortization, what the property looks like, the metrics on it. So if you look, this particular home sold for $47,000. It was appraised for over $65,000. If you look down here on the bottom left, the rental income for the year was $9,180. Now there is going to be some operational expenses that go with it, including taxes. You might have something happen in the property. It's an operating expense, right? You've got property management fees and some other things. So that's $2,688. If you use your IRA to invest, then basically we're assuming that this is purchased by the IRA and not using a lender. So your cash flow is $6,492 back to your IRA with a cash-on-cash return of 13.8%. That's amazing. In fact, I find that that's more than double what people are currently getting in their IRA right now. Here's another property. This one was purchased for $43,000. The rental income on that is $8,694 a year. If you break that down, that monthly rent revenue is coming out to about $805 a month for this property. The operating and taxes are operational expenses and taxes, $2,991, leaving the cash flow back to the investor of $5,703. Again, 13.3% return on your money. We'll go through a couple more here. This one was purchased at $51,000. Let's see, $9,720 or $900 a month. and then your expenses is $2,703, leaving the cash flow back to the investor of over $7,000 a year. This one's putting out about a 13.8% cash-on-cash return. Let's see, I think this is the last one. $52,000 was the purchase price, $875 a month in rent for a total income of $9,450 minus your expenses. Leaves you a return on your investment of 12.1%. So, same thing, $45,000. As you can see, these properties aren't $200,000, $300,000, $400,000 houses. These homes are anywhere from $40,000 to $50,000, maybe a little bit more than $50,000, but they're also giving a fantastic cash-on-cash return. So, again, Brian was stating, if you guys have any questions, and I just briefly went over this, I know that there's probably going to be a lot of questions. So for more information about these types of investments, like the ones you just saw, or maybe you want to do a partnership on some new construction deals we're doing in, let's say, Kansas City, Missouri, or some maybe partner up on a fix and flip that we're doing, just go ahead and contact me to set up a strategy session. This is my information. I'm Darrell Kucan. info@kucanandclark.com, and that is my cell phone number. Feel free to call me or text me, and I do answer my own phone. So it's 760-683-4801, and that's going to wrap it up for me. I'm going to turn the controls back over to Brian, and we'll go from there.
Yeah, we'll leave your contact information up here for a minute, Darrell. I'll kind of cruise back and forth, but if anybody wants any more information about San Diego Investment Club, because I see a lot of the attendees here, I'd say probably half of them are local from at least what I can gather. But how can they visit your guys' real estate club here locally, and tell us a little bit about it?
Yeah, it's very simple. You can go to www.sandiegoinvestmentclub.com. We always meet on the first Thursday of every month right there in Del Mar, right across from the Del Mar racetrack at the Del Mar Hilton. We meet the networking, and that's a great place to network as well. We have anywhere from 50 to 150 people there showing up every month. Networking is from 6 p.m. till 7 p.m. And then we get our main meeting started from 7 p.m. to 9 p.m. In fact, one of our speakers coming up next month, his name's Darren Davis. He's going to be talking about fix and flipping. The month after that, we have the famous Bruce Norris coming into town. He's going to be talking about stay put or cash out. Great speakers, great information. And then after the meeting ends at 9 p.m., we generally tend to meet in the bar area, and that's actually where all the deals happen. All the serious investors stick around, and we kind of mastermind and come up with solutions to problems and even partner with people.
Well, great. Well, again, thanks, Darrell, today. If anybody has any questions, there's a lot of you here, but not too many questions being asked here. There's a questions tab because, we are done a little early today. So if anybody has any questions, feel free to do it now or email Darrell or myself, and my contact information is here at brian@independentira.com, which you can find me at independentira.com as well. But Darrell, how long have you guys been in St. Louis there?
We've been in the St. Louis market for over 2 years. The Kansas City market, we've been there almost 3 years, and they're different, right? Kansas City, we're building new construction homes. St. Louis, yeah, we've been there over 2 years, and we love it out there. It's again, great people, great cash flow, great cap rates, great cash on cash returns, and yeah, it's pretty amazing. You can buy a house for about $50,000 and have people rent it for $800 a month. It's insane. It's great.
Right. And for those of you, just kind of quickly, I don't have a slide for this, but if you're looking to purchase it in your IRA, then you would make the offer in the name of your IRA, which with my custodian American Estate and Trust would be let's say it was my IRA, it'd be Brian Davis, legal owner via non-trust custodial IRA with AET. So that would be the name of the offer. I, as the IRA owner, can sign all the contracts on behalf of the IRA and then provide that to the custodian along with the direction of investment form with the signed purchase contract. So that's how you would purchase that piece of real estate in your IRA, and your IRA would be the owner of that, not you individually. It would be your IRA and the IRA's EIN number, not your social, and it would go to our corporate address in Las Vegas. So that's kind of the process how that would work, and rental income would come in back into your IRA. Again, I don't know if let me see, I think somebody's writing something. I see something.
Well, one thing I forgot to mention was that, I've got a lot more information than just the slides you saw. I mean, I've got all the breakdowns of the rent rolls. I've got the expenses. I've got everything that people would need to make that decision. So again,
Right.
if you have any questions and maybe you are serious about purchasing one of these, if we need to, we can get on a 3-way call and we can all work together to make this happen for you guys.
Exactly. And just since we were talking here, I got a question here. Brian, can you repeat that process you just shared? I'd like to hear that again in regards to purchasing the property in the IRA. So you make the offer in the name of the IRA, which we have changed our vesting this year with American Estate and Trust, and now it's would be, if it was my IRA, Brian Davis, legal owner via non-trust custodial IRA with AET. So that would be the purchaser on the contract. We'd want a copy of the signed contract along with one of our forms called a direction of investment form, directing us to invest into it, and with wire instructions, and we'll send money to title or escrow, and that'll be that. Generally, there's a earnest money deposit first, so there might be a little bit back and forth, but that's how it works in your IRA. And again, if anybody has specific questions about that process, feel free to email me or call me. One other question we got here from a client: what are some of the tax implications from buying from an IRA? And if you're buying it all cash outright, there are no problems here with buying a rental property in your IRA. There's no capital gains. All that income goes back into your IRA, tax deferred or tax free, depending on if that is a pre-tax IRA, like a traditional or a SEP IRA, or if it's tax free, like a Roth IRA. So there is no tax consequences on the income from purchasing that real estate in your retirement account. And I would be remiss if I didn't also offer, if you guys want to go on facebook.com/independent IRA, you can follow my company there. And any last words here, Darrell, before we go?
Well, just referring back to the process, it's pretty simple. Like you said, you make the offer, just like Brian said, and then once the offer is accepted, the buy direction letter goes back to the IRA company, and then we open escrow and title. Once escrow and title are opened, then the earnest money goes in, and we go through the process, sign some documents, and then it's pretty simple. We close on the property. The IRA then wires the money over to escrow, and then escrow closes the transaction. The deed to the property then goes back into the IRA, and the IRA now owns that asset. It's pretty simple.
Yeah. Well, Darrell, thank you for your time. Very informative about how turnkey real estate rentals work. I like to see I love the examples of ones you guys have done in the past as well. And again, for any more info on how turnkey real estate rentals work, you can contact Darrell. Darrell, do you still have your contact information up? I was going to put your screen back on here for the last couple of seconds.
I do. Go ahead.
Okay, so here's Darrell's information again. If you guys want to contact him, info@kucanclark.com, or their phone number 760-683-4801. Again, thanks for your time, Darrell. And again, if anybody wants to meet them in person, San Diego Investment Club, first Thursday of the month in Del Mar. You can contact Darrell for more info.
Awesome, Brian. Thank you, everybody that was on the call. We appreciate your time. You guys have a wonderful day.
Thank you, guys. Bye.
Bye-bye.